In the last 24 hours, Bitcoin has seen a decent move towards the downside, retesting the 16,000 psychological support. We are moving sideways now, moving between that 16,000 level and the 16,300. Today, we're going to be focusing on technicals, looking at the short term and the macro, trying to discover whether or not there are any indications within the technicals suggesting we are near the bottom and potentially going to reverse. Let's go ahead and dive into the charts. Okay, welcome back to the channel, MegaWhale team. Thanks for tuning into today's video. Hope you're all having a fantastic day. We're going to go ahead and take a look at Bitcoin today. We're focusing more on a technical standpoint. So we're going to be doing more of a technical analysis. We'll briefly cover the price action analysis to give you guys a little bit of an understanding of what's happening with the price action, tell you the trigger points and where the price can go. But for the majority of today's video, we're focusing on the technicals. The short term, the mid-term, and the macro. What are the technicals suggesting? How have they changed? And can they be indicating any signs of reversals or continuations lower? Now, before we get into today's video, guys, smash the like button, comment down below if you have any questions. I appreciate all your comments and I always go through and read every single one of them. And of course, hit that subscribe button if you're new to the channel. We do daily videos of Bitcoin, technical analysis focused, price action analysis focused. We focus on the objective data and nothing more. Let's go ahead and dive into it. But one more thing, actually, head down to our second pinned comment, the second link. Join our Telegram channel, get access to all of our charts, information, more. All of our videos are posted here and heaps of content you need to navigate the complexities of the cryptocurrency market. Of course, if you are interested in VIP, we post specific trade signals such as this one here, complete entries, targets, stop losses, and so much more. You can go ahead and access that by contacting me via the free channel. Let's get into it. We'll start with our data. So November, 20.61% negative so far. Again, it is creeping back down over the last 24 hours. We have seen the price come down about 3 and a bit percent. The quarterly, again, we're coming up to the end of the month over here, the 29th of November. We're coming up to the quarter close in 4 weeks time. So we've only got about 4 or 5 weeks left of the month, and obviously that will close the quarter. So we are negative 16, guys. If we do close this negative 16, if we close it in red, this will be the first ever time we've seen 4 red consecutive quarters over a 1 year period in Bitcoin. So it's pretty interesting, pretty bearish, not a great sign. But it can't keep going. Obviously, at some point, we're going to see a reversal. Volatility is coming down still. We're at 4.01. We have seen volatility obviously drop off over the last 15-day period, 20-day period. We have had a lot of consolidation after we saw this significant crash from the FTX, obviously crashing through that symmetrical triangle formation. We did actually now see a lot of sideways consolidation. We had the consolidation zones, followed by rapid movements, followed by consolidation zones, followed by more rapid movements. And obviously volatility will price in these periods here as lower volatility, and shorter periods over here with high volatility. It kind of does average out to a more steady curve in that volatility over a 30-day period. So volatility over a 30-day period hasn't been massively high. It is definitely propped up by what we've seen at the start of the month. It's definitely propped up by what we've seen on these, explosive moves. But all in all for the month, we have seen a lot of consolidation. And in fact, if we take a look at the price action over here, we are mainly consolidating under this downward trending resistance. Okay, this downward trending resistance is basically that resistance of the month, this monthly downward diagonal resistance, where we're basically been consolidating underneath this entire month, as you can see by the price action. Liquidations are on the medium side. I like to say they're quite low, under about 50 million to 100 million. It's getting up to anything about 100 million and up is where liquidations start getting high. Again, liquidations indicate volume. Volume's low, volatility is low, price movement is generally smaller and less extreme. And that's kind of what we're seeing here. So let's go ahead and talk about the rest of the market. DXY, we actually had that breakout yesterday, and obviously the market's dumped when the DXY opened. Now, when the markets open, obviously we had this crash down. Okay, traditional markets opened and the DXY has rallied back up. We're testing that 106 level, not quite getting above it. We've cracked above it a little bit, but again, as you've seen in the past, we can fluctuate around that level a fair bit. What we're looking for is a break over 107. This will enable a retest of 107. A break over 107 will enable a push higher for the DXY. And as we already know, guys, as the DXY continues up and up and up, traditional markets will come lower and lower. And since traditional markets are correlated to a degree of 0.7 with Bitcoin and cryptocurrency, we generally see cryptocurrency follow. I say generally because it's not a perfect correlation. It's around a correlation coefficient of 0.7, meaning about 70% of the time it does correlate with the price action and movements of the traditional markets. And we already know the traditional markets are heavily reliant on the US dollar, and the strength of a US dollar is determined by a DXY. So that is why we look at the DXY when we're doing Bitcoin analysis, because it can provide some insights on where the potential direction is going, if not the daily bias in the direction for markets. Taking a look at the total cryptocurrency market cap here, we do see the total cryptocurrency market cap was actually able to withhold this horizontal support level at 765 billion on this recent drop. A good sign to see was as we start approaching this level, we enter this danger zone, okay? This is the danger zone, meaning that we do not expect to find a lot of support. Once we enter this range again, we'll most likely push down below it. If we do push down below it, we can see that continuation down to 575 billion, 533 billion, which will take Bitcoin even lower. The danger zone for Bitcoin, guys, is again this 15,500 level, pushing up, pushing slightly down or up to around 15,700. This level here is a danger zone for Bitcoin. It's actually better expressed on this chart over here, sitting between 15,800 and about 15,550. This is the danger zone. If we enter the zone, we are more likely to continue. The continuation will take us to about 13,900 to 12,000 for a downside move, okay? So we are getting closer to danger zone. Dow Jones has failed to withhold over 34,000. 34,000 being that major horizontal support resistance point we have seen on the chart prior to this price action. Again, we do need to remain above 34,000 if we want to retest the point of control. The point of control will enable a retest of the major rejection point. This is the point we need to break over to start getting some positive momentum and positive price action moving with the volume declining into a nice uptrend, okay? Until then, we are still under massive threat for a continuation downwards. If we go ahead and bring up the RSI, what we can see here is a potential bearish divergence. So weak bearish divergence is not very steep, but we do have a declining RSI and we do have a rising price. Therefore, it is still nevertheless a bearish divergence, indicating a potential rejection. S&P 500 in a similar point, it has come back down to retest the point of control, the point of the highest volume in historical trading volume right over here. You can see that we do have this local low here. Losing this local low will send the S&P 500 back down, most likely to retest the support level at around 3,800, potentially cracking below it, okay? Very big threat over here was we do have some degree of a rising channel forming, and of course rising channels are bearish patterns, so something to keep in mind. Let's go ahead and quickly do our price action analysis of Bitcoin on the small time frame, and then we'll go ahead and jump into the crux of today's video, which is a technical analysis. So on the price action analysis, what we can see here is, of course, Bitcoin has lost this upper support level at the POC. We actually got rejected from the POC over here. We got rejected multiple times from this downward sloping resistance, failed to get above and break through 16,800. The 16,800 was the key point of resistance on the chart, which would enable Bitcoin to push higher, okay? That is still standing. That still remains valid. The key point of resistance for Bitcoin to push higher, the point we want to see the price break above to see a continuation upwards, is still 16,800. That still stands very much valid. What we saw over here was a period of tight consolidation and compression over the weekend. We had decreasing volume, we had decreasing volatility, and that equaled decreasing volatility in price. It decreased the swings in the price. We had this compression, okay? We had smaller and smaller moves until we came to the apex where a directional move occurred. And the DXY opened green, therefore the markets did fall, and Bitcoin subsequently fell with the DXY, and obviously the markets came down. So we did see Bitcoin come down here, and it has actually retested and actually initially did break through the support zone, retesting this little gap over here. As you can see in the VRPR, this lower volume range, we're most likely to find support at around 16,000 level. The 16,000 level was retested. We found our psychological support of 16,000. We have slowly now bounced up. So we'll come down to it on a very small time frame in a second and do a price action analysis and decide what the structures are looking at. But from a larger time frame here, what we are expecting, number one, is two things. If we do break above this level, nothing's really changed, okay? Nothing's really changed, because the key level to break above is this level here and this level here. We only really care about the bullish outlook for continuation upwards. that could take us realistically as high as 18,100 if we get above that level. Until then, your mindset should be, okay, when can I look for shorts? When are we looking for rejections? When are we looking for continuations? What realistically could happen here is a rejection from this point, a continuation to this level. If we do lose this level, as you can see, a very weak support, okay, very weak support, we're more likely to come down here. And this again, like I said, is the danger zone. The reason it's a danger zone is because, as we expressed before, this is the last level of support that we have, according to the technicals, stopping us from going to 13,900. So this is the last line of support before a potential big crash, okay? Let's go ahead and do a smaller time frame analysis. So that's the price action analysis, guys. Again, if you want a more extensive price action analysis, so if you want a 30-minute video about what is happening at the price action here, what you think's happening, what you'll see in the macro, go watch yesterday's video. We did a full analysis on the price action. Today we're focused on more technicals. But before we do that, let's go to a 30-minute chart. Let's go to a small time frame. Let's take a look at the price action really quickly and see what is happening. So what are we seeing here? It's a mess. It's an absolute mess. But what we're seeing mostly is obviously chop. This is nothing more than chop right here. So it's telling me that the price is struggling right here to make a definitive directional move. It is struggling to decide where to go, okay? It's very hard to say for sure what's going to happen. We do need to watch our trigger points, being this lower level and this upper level. So the trigger, break above here, closing an hourly above here will most likely to continue upwards, okay? Trigger and break below here, any time frame really, a close below this level. We did not get that close here. We're looking for that continuation to the downside. I think more likely than not, we're going to be heading back down. In terms of structural standpoint over here, you cannot really see any definitive structure. It is looking very messy. I could try my best to, I guess, incorporate some degree of structures on this chart over here. Maybe this downward descending trend line over here, as you can see, rejection point. But again, it is going to be utterly useless because what does matter is, again, these trigger points. So we don't really care what the structure is telling us right now, but even if we have applied a structure, say for example, we applied a structure here, as you can see, the structure is still present within these trigger points. So what does matter is not the break out of these potential structures, but the break out of these support and demand zones or these supply zones. That is what matters. So the structure is pretty much invalid, or at least irrelevant, because again, what is determining the price action for a continuation downwards or upwards here is not the structure, but more or less these support and demand zones, okay? Or supply zones, should I say. Let's go ahead and zoom out to the large time frame. And looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Start our technical analysis of a larger time frame, and then we'll come down to a smaller time frame. So again, if you're not familiar with this chart, guys, this is the Bitcoin chart. This is the macro chart for Bitcoin. This ascending trend line is the bear market resistance. Okay, this is the bear market right here, our bear market macro downtrend. As you see, the bear market right over here, we do have our downtrending resistance level, which is our bear market resistance. So I'm not going to go over this chart again today, but it's very straightforward, guys. Downward descending channels. Okay, descending channels are generally bullish reversal patterns, meaning they are downward consolidations, okay, until we get the breakout of the trend line. This is our downtrend. This is our downtrending trend line. We get the breakout of our downtrending trend line. We have broken the downtrend. We are able and free to create a new uptrend. Really quickly, guys, for us to develop a new uptrend, the key level we do need to break above is, of course, 2 things. Point of control, which is that massive horizontal support range that we had for about 4 months in June. And of course, we need to get above this chunk of higher volume, which is around 22,000 to 24,000. The reason being this was a chop zone in December 2020. As you can see, immediately after we break above there, we can see a huge volume gap over here, taking us back to 30K, which is a yearly resistance or support, depending on what side you're on, for the bull market. So for us to develop a macro uptrend or to start developing an uptrend, we need to get above this level here. We need to get above 22 to 24K, okay? For us to get into an uptrend, we need to get above the point of control, which is around 19,000. Until then, we are still technically in a macro downtrend. Technically, macro downtrend still, which means we can still go lower. We have to be open to the fact that it is possible that we do continue down. But again, as soon as we start breaking these levels, the trend can start to flip. So what are we looking at over here? From a technical standpoint, let's go ahead and bring up some indicators. I want to start on the weekly chart on a really large time frame, and we'll obviously start with the VRPR to indicate these zones of support and resistance, and then we'll go ahead and do some moving averages analysis and more importantly the momentum. So what we can see in the VRPR here is another gap. We see a gap between where we are now, about 15,500, and the next one takes us to a little bit more of a chunk over here, which is 13,900, 12,000, indicating our first initial support will occur at around this level if we do continue lower. From there, we have what would be the largest chunk of historical trading volume on a horizontal scale that we've had on the Bitcoin chart in history, okay? I'm not talking about the largest in terms of horizontal volume on a particular point, but I'm talking about spread over a specific price range. This is the thickest chunk. So we see the largest chunk is actually at 19K. The largest chunk of historical trading volume on the Bitcoin chart, according to what kind of data we're taking in here, which is from all the way back in September 17 to the all-time high in Bitcoin, the largest chunk of volume we had, historical trading volume, which means the most amount of trades occurred right over here, okay, in terms of volume, right over here, 19,000. All right, that accounts for this level here, that accounts for this level here, and that accounts for the huge horizontal support we found in June. Like I said already, that June support was not insignificant. That's a massive support. The fact that we're underneath it now makes it incredibly difficult to break above, because as we know, strong supports turn into strong resistances. As you can see, moving down, we have a huge chunk right over here, meaning that if we are able to push into this level, it's going to be very difficult for the Bitcoin price to crash through that level. Meaning that the logical spot for a bottom is either this level here, 13.9K to 12K, or upon a clear reversal and breakout of the bear market. That would be the 2 points I'm looking at purchasing Bitcoin again, okay? From a technical standpoint, that is what our support and demand zones is suggesting. That is what the volume is suggesting. Let's go ahead back to a weekly, because I want to go ahead and bring up the RSI again, because RSI again is something we can utilize to kind of assist these breakouts, confirm continuations, and help us with our analysis a little bit. So what we can see in the RSI here, if you haven't spotted it already, we see a very clear descending wedge. Now, descending wedges are bullish patterns, meaning again, they are downward consolidations that converge together as the trend line's apex, okay, or converge, and eventually they do result in a break upwards. So these are bullish consolidation patterns, okay? We have confirmed the fact that this is a falling wedge. We have 3 retests on one side, 2 retests on one side, and these are sitting between the other resistance points. Okay, so we have a support point sitting between the 2 resistance or 3 resistance points. So what we're looking at here, guys, is a breakout of the RSI. If a breakout of the RSI occurs at the same time or equally the same time as a breakout of the descending trend line occurs, that would be a confident breakout of the bear market resistance. We would expect a continuation upwards from that point. So keep an eye on the RSI, particularly on the weekly chart. We're waiting for a weekly close on the RSI above that downward trending resistance at the same time as a weekly close above this downward trending resistance of Bitcoin to confirm that the breakout of that bear market resistance has actually occurred, okay? If we don't get both at the same time, it's hard to say for sure. If we do get both the RSI and the price action, so the momentum, velocity, and speed, as well as the actual price action breaking over, number 1, a key shifting point in momentum, and number 2, a long-standing diagonal resistance, we have more confirmation, we have more confidence that this break will actually sustain and lead to an uptrend and not just fake out like we've seen before. So let's move down to a smaller time frame. We'll go down to a 3-day chart and get rid of everything on the chart and start bringing up some more indicators. So another really interesting thing here is the 2-day 50 EMA cross, or the 2-day 50 EMA or moving average. What am I talking about? That 50 EMA moving average right over here on the 2-day chart. This is the red line. Now we've seen a few things on the 50 EMA, particularly the key things that stand out to me is here, and the key things that stand out to me is here. These are two really important points. Now we have to keep in mind that, like I said yesterday's video, technical indicators don't tell us what the price is going to do per se. They tell us the strength of the trend. So if we want to look at where continuations are going to occur, or if the price will continue, not only do we need the strength of the trend to be positive, but we need the price above our diagonal resistances, we need our price above our support and demand zones, we need positive price action as well. So in this instance here, we had the price push above the 50, which is technically bullish, but it wasn't sustained because we actually got met by a pretty strong resistance here. And that developed this downward trending resistance. That was that key point. It was a very important point for the Bitcoin over here, but that was when that downward trending resistance initiated. That's when we developed this downtrend. Okay, that was when the downtrend kind of developed. From there, we retested a downtrend again over here, which we had a 50 EMA rejection on the 2-day, plus a rejection from that bear market resistance. So at that point, we actually developed that 50 EMA rejection, and of course that bear market resistance. Really interesting stuff. And the reason it's interesting is because if we get a 50 EMA cross outside of this downward diagonal trend line, we will have not only positive strength in the trend, but we'll have a positive price action, which means, again, it's another element of confirmation that if we do get the RSI break, we get the price action break, we get the price over 50 on the 2-day, we have all these pieces of confirmation telling us that the bear market is actually over, the downtrend has been broken, we can start to develop a new uptrend. Okay, we have seen before, every time we cross over the 50, we generally have continuations upwards. You can see it over here again. Every time we cross over the 50, we generally have continuations upwards. There's something else I wanted to talk about though, and this is going to be on the Brave New Coin Liquid Index. I'm going to go ahead and actually what I'll do is I'll just go ahead and quickly reverse this chart, which we'll come back to in a second, but I want to go to the Brave New Coin Liquid Index. And this is a cool piece of technical indicators I've been looking at over the course of a few months now. We're going to have to go to the log chart, and you can go ahead and bring this chart up for yourself. We'll go ahead and remove the indicators, and we want to go ahead and bring up the Ichimoku cloud. And specifically, we want to get rid of everything except the baseline. So we'll get rid of everything except the baseline. Here it is. And we want to go to a monthly chart. So 1 month chart, which is going to be this one here. So what we see in the monthly chart with the baseline actually indicates bull market initiations. It indicates when the bull market actually begins. What we can see here is as soon as we get a break over on the monthly, the baseline, we go into an uptrend again until we close a monthly below the baseline. We go into a downtrend. I'll show you again. Push up, monthly close, push up. We enter a bear market and downtrend when we close again the monthly below. Even this whole time over here, February, March, April, May, June, July, August, September, October, to January, November, April, May, the whole year we held above that baseline through these big moves up and down for Bitcoin in swings. We entered that bear market sooner. It was a lagging indicator, of course. We entered the bear market around January, but of course, according to this, we entered a downtrend around May. So again, this is a good indication for where bull markets are going to start. It is going to be lagging. Again, it's going to be a lagging indicator. You'll not get the beginning of the bull market. You won't get the bottom of the bear market. But again, according to the data over here, every single time we see a monthly close, we are confident to say that we're going to see a massive continuation upwards until we get another monthly close below this trend line before you see a long standing, this is months. We're talking months. We're talking, 5, 6, 7, 8+ months, these trends, until we go back down. So what are we looking at here? We're looking for that same thing. So again, this is sitting around 39,000. It's likely to say if Bitcoin continues for a little bit here, continues upwards, we'll see this crossover occur at some point. And this is what we can do here. We can use a date range. So generally we see from tops to bottoms, we usually see a period of around, it's usually about 12 to 14 days from tops to bottoms, okay? So at the 12 here, we see 12 bars here. Now from where that bottom is to that first candle, we usually see about 16, and as you can see over here, about 17. It's pretty close. So assuming we're going to be about 16 or 17, that should occur on February 1st, 2024, when we'll get that crossover again. Meaning, before then, obviously the bottom will be well in. The bottoms are very, very close according to a data. We would have developed a nice, strong uptrend, and the bull market, according to this, will initiate at that point, sending us to a new all-time high. Something to keep in mind on. I'm going to go ahead and leave it there, guys. I think I've talked way too much today. If you have any questions, leave them down below, and we'll catch you in tomorrow's video. Cheers.